Hello guys, just checking the tech stuff. Does it work? I have no idea. Um, well, in any case, it works. I just want you to know that I'm here a little bit early so that I can test the tech stuff so it won't start right away. I don't see it running on LinkedIn so far, so I have no idea if it works. Yes, it does, but I will need to close that. I will need to close that. What is it? I have no idea. Okay, so it seems to work. No, it seems to be working. We're a bit 2 minutes early, so wait for people to join. So you may have noticed I have my Celtics t-shirt because the Celtics won the NBA championship. I used to be a big fan of basketball, but I don't follow as much as I did. You know, when I moved to the US in 2011, I used to live in Greenwich, not South Carolina, like I do today. And so I started following the best team that was around, which was Boston, the Knicks, who sucked at the time. So Boston was the team, and they were fun to watch. So that's the Paul Pierce number. If you remember, you had the big team that had won championship in 2008, if I remember well. They were still together. You had Paul Pierce, you had Kevin Garnett, you had Rajon Rondo, and that's basically that was the big three of the time. What time is it? 10:14. Um, can I say what can I tell you? Private chat. I mean, let me check because I changed the platform, so I'm just checking that everything looks good. Um, Q&A, send your questions in the chat. I even have no idea if the chat works here. Hopefully I will see it. If anyone is here at this time and can comment something just to check if it appears anywhere or not, that'd be great. Otherwise, if it doesn't work, I will have no option to answer any question. So I just hope this works. I just hope that someone will comment something. Please say hello, whatever, any kind of stupid thing. You can put that in the chat just to make sure it works. I don't know if I can. So let me check directly on LinkedIn if I can see something. Yeah, I'm writing a little message to a friend asking him to comment something to see if that works. What if I try to add a comment myself? Hey, this is a test. Hey, this is a test. So this seems to be working actually. If it doesn't work, I'm sorry, but I will start. It seems to be working for me. So I hope it does for you. It's 10:17. I can still wait a couple of minutes here and there. I'm just checking the fun stuff here. Um, It looks good. So I will try to use that platform. With this one, I'm sharing this on LinkedIn Live. In LinkedIn Live doesn't work. It's supposed to be sent at the same time on my YouTube channel that I actually don't use much, but at least this will be recorded for future viewing if anyone wants to. So LinkedIn Live, YouTube Live at the same time. So Restream seems to be a much better option than StreamYard, with at least so far less technical issues. So since we seem to be ready now. Oh, okay. So we have people here. So we still have, some guys that shows that LinkedIn users. That's interesting. Stuart, bonjour. Merci beaucoup, Stu. Thank you. That's cool. Ça marche. Oh yes, we have French guys here. That's cool. Okay, so we have some people. The tech stuff is checked. So since nobody knows who it is, I will leave this one on the screen. Um, yeah, stop. Let's stop having fun and dive into it. Along this, as usual, if you have any questions, just send your question in the chat. I'll be able to take a look at them and answer very likely at the end of the discussion, unless I see any comment. Oh, okay. Say James. Yeah, I mean that's my guy. Okay, cool. I mean, okay, let's stop having fun. Send comments for later, and hopefully I'll be able to answer your question. So we start with geopolitics as usual. And what is geopolitics? It's World War III, just because everyone seems to be getting ready with many exercises everywhere in most part of the world at the moment. You have the US that is doing some exercises in the Baltic Sea near Russia. You have the Russia Pacific Fleet that is beginning exercises on the Far East. Pretty large exercises with 40 ships and boats and support vessels, 20 aircrafts, helicopter, naval aviations. So the full thing. They are also starting try in the White Sea, which is up north with Russia. They are testing some vessels that are able to send hypersonic missiles, and that they plan to base on the north near Finland, if I remember well. You also have the Chinese army who is testing, doing exercise, and they have been simulating as well the destruction of U.S. Navy carrier, just to figure out what's on their mind. So everyone is getting ready for war, practicing for war. So I guess we're getting closer every single day, like I've been saying. Um, we'll see. I mean, like I said the last week, I believe that um, well, I will get into that because I have information about that. So this week we had the peace conference in or this week or last week in Switzerland. Obviously, nothing came out of it because even the U.S. ambassador, what's her name, Linda Thomas Greenfield, who is the ambassador to the UN, stated that it was actually not peace negotiations since Russia was not even invited. So basically they have talked together, and it was kind of a way to separate the wheat from the chaff, I would say, if I can use that expression for this, because they came with a resolution that was drafted by the West, obviously, and you had countries that was mostly participating to this, aligned with the West, and other that were not directly aligned, but don't have chosen their side yet. So we had 92 participants, about 80 signed It's not an agreement. It's a statement, a declaration, and so the rest you have 12 that didn't sign it. Among them, you have some significant country, obviously, most of them belonging to the BRICS, such as Brazil, Iran, India, Indonesia, Saudi Arabia, who has been a long time ally of the US, the United Arab Emirates. You had Mexico not signing it, Thailand, the UN itself didn't sign it. I don't know it in which capacity, to be honest, and even the Pope didn't sign it. So that's it. That was just for the fun part. What else? Washington extended its authorization to Kyiv to strike Russia inside its territory. Before it was limited to the region of Kharkiv. To try to regain that part, but now they obviously extended their authorization to the full Russia territory. We have what? Yes, you've seen that probably this week was kind of some funny stuff, I could say, with Putin and Kim Jong Un. I don't know. Kim basically meeting this week. They renewed their their alliance with a mutual defense treaty signed. So there was a lot of typical communist propaganda images, which are always fun to see. At least, I mean, it really looks like from a playbook from the 60s, from the USSR in the 60s. So that's why I think it's funny. But since they have renewed and signed that specific treaty. And like I said before, if the world is going to war, it will start everywhere. Russia, Ukraine, China, Taiwan, South Korea, North Korea. Everything will run at the same time, start at the same time. And South Korea definitely got the message, because since this signature of the agreement, South Korea will said that they will reconsider sending arms and helping Ukraine. Yeah, just to make things clear. And then Putin also declared that it was actually a very big mistake from South Korea to help Ukraine, because obviously, I mean, depending on when it starts, when it's developed. Now we know that today North Korea is helping, providing weapons to Russia to fight against Ukraine. But obviously, depending on how it evolves, North Korea will definitely attack South Korea, and obviously Russia will help. So this is where we're going at this point. After that, Putin continued his trip to South Asia. Everyone is with that kind of peace agreement, peace conference that was not won. This tour of Putin around Asia, basically, everyone is checking its own alliance. So you have exercise. I don't remember how you call this. So you have exercise, you have meetings like this. Everyone is checking who is an ally, who is not, and basically what they can do. So it's still not a good sign, because what the US has managed to do is against the Brzezinski doctrine, which was to separate China, separate US enemies, which are China, which have been China, Russia, Iran, and North Korea. And what the current administration managed to do is to unite all of them against the US. I don't know how it's a positive, but it just makes the world more dangerous than it was before, and it was already not a good situation. You've probably seen that we've talked about this. The Russian fleet has left Havana in Cuba. Again, like I said last week, it was probably a demonstration that if the conflict would extend in Ukraine, this would not be contained in this region, in the Ukraine Russia area, but it will spread even to the US soil, which I think that is a deterrent for possible escalation. I really believe that the US started this because they really thought that Russia would collapse quite rapidly. Well, it didn't happen. And I think that one of the deterrent for possible escalation is Russia showing that they are capable of hitting the US, which may the US think twice before escalating further. The balance of power between the USSR and the US, which were, but basically they were the worst situation. We had really bad situation, difficult situation during the Cold War, but that's what prevented, the world war from going basically extinct, because this has this balance of power. Hopefully, the balance is kind of being restored, just to make everyone think, not to do anything too stupid. So you have the Russian fleet leaving Havana. So you have a couple of positions of Russian ships and submarine on the map. This is what I've said, since a long time ago, that they probably have, so submarines cruising along both coasts of the US, which seems to be the case. They also have ships in the near in the Caribbean Sea, and in the Pacific as well. So it's not only the US being in Ukraine, it's also Russia being around the United States. And just, a little bit statistics about the submarine fleet strengths. Something that I didn't know actually is that Russia has actually the biggest submarine fleet in the world, slightly above the US and China behind. I had no idea about that. I didn't know they had that many submarines. But anyway, we'll still learn. China, what is this chart? It's still a bit confusing, but this is what I found on Twitter. It shows the estimate of the nuclear arsenal of China, which is already big, but they are expected to have more, let's say, striking power in the next 10 years, with ICBMs than the US. They appear to be the leading force in producing ICBMs, so intercontinental ballistic missiles, within the next 10 years. So it's basically they are planning to be one of the major military force in the world, better than they are now. And by the way, I've seen this yesterday. If you combine today the US, so if you combine Russia and China, they both have respectively 3,700 and 4,300 nuclear warheads, which is the majority of the nuclear warheads in the world, which also means that, you don't need that many warheads, obviously, but what does it mean is that if someone tries to strike them and annihilate them, if they are certain of their annihilation, they want to make sure that the other side will be annihilated too. That's the point. Other things about Asia before moving on. Xi declared that the US tried to encourage China to invade Taiwan, probably to start a war, and maybe just tame China for quite some time. So Xi, so we have no idea basically if it's true or not, but it's just a declaration that shows again another escalation. And Xi didn't fall for the hook, like he said. Maybe just like Putin didn't fall for the hook either so far. This is a declaration that Xi made to the European Community president, the non-elected community president, von der Leyen, in less than a year ago. So Like I said, the Chinese have simulated the destruction of US Navy aircraft carrier with supersonic anti-ship missiles. So basically, they are training for that as well. Last thing about Asia, you have a couple of Malaysia asking to join and as beginning the process of joining the BRICS. To a lesser extent, obviously, you have the Republic of Zimbabwe asking to join the BRICS. Obviously, it's anecdotal, but it just shows a trend moving away from the West to the East. What do we have? So the U.S. Election. I don't know if you've seen. I mean, the voters in Europe didn't vote well, according to the European Union. And so last week I mentioned that the European countries that didn't vote well, I mean, really pro-Euro, pro-NATO, pro all that stuff, pro anything you want, pro-immigration, a lot of that kind of thing, which is against the European Commission directives, would probably be attacked. I mean, financially at some point. So the most likely, for instance, for France would be attacking its bond market, which is already weak, and remove financing for the government. On top of that, you have the European Union declaring that they are planning to impose some sanctions on a list of countries, basically that didn't vote well. Sorry, I don't remember which one are they. So yes, you had France. Obviously, vote on the right. You had Italy with Meloni, obviously. Belgium, you had Prime Minister resigning recently. You had Poland, Malta, Slovenia, Hungary, basically all the bad guys, and they are ready to crush them if they don't do what they are supposed to do, which is the democracy as the European Union is. Just a reminder, the European Union, there is a parliament, which were the basis of elections in France, for instance, but this parliament is elected but is only allowed to pass laws based on the European commissions, where they have commissioners that are named by government. They are not elected. So basically you have a simulacra of democracy, which is okay, you vote for basically something that has no power. And you have to understand also that 80% of the laws passed at local countries such as France, 80% are implementation of the European directives into the local laws. So that's where we are in terms of democracy in Europe. It's not because you vote that you have won, in my opinion. So let's go back to economy. So that's the US dollar. So we see that because I've spoken about the dollarization earlier this week, the usage of the dollar is going down, but it's obviously very largely predominant at this point. We went in 20 years from 70 to 60%. I believe the euro is about 20%. The renminbi is nowhere basically at this point. It was just the idea is to show you the global trend at this point. Do you have something? Just checking the chat if someone asks a question. Still no question, so I hope that I am clear. Okay, let's skip that. So basically that's the idea. I mean, so I talk about the dollarization quite often with development of the BRICS, like I've shown before, countries joining the BRICS. But obviously these are trends that takes, decades very often. So this is for the last 20 years, the last 2 decades. The dominance of an empire usually lasts about 250 years, something like this. So it doesn't collapse in one single day. I'm not even sure that I will see it myself in my life anyway. But basically, that's the trend. I wanted to say a little bit something about the deficit that is getting worse than expected. The 2024 US budget deficit has been re-estimated upward to 1.9 billion compared to. Let me play with this when I'm not. That works. Sorry, just having fun again. We estimated about 1.9 trillion when it was estimated at 1.5 trillion, and the forecast deficit to GDP ratio will rise from 6.7% when it was estimated at 5.3%. So it's going up. It's based on the current policies of the current administration. As a reminder, the current administration has passed, a student loans forgiveness plan, which added 145 billion to the debt. You have the aid to Ukraine, Israel, Taiwan. So I mean, the number that I have is about 60 billion, but if you combine all of them, that's much bigger than that. I believe 60 billion is the most recent package for Ukraine, actually. And so you had other resources that didn't come that mechanically increased the deficit, and you also have increased in Medicaid spending. And the Social Security is expected to be is already today the biggest area of expenses for the government, and this won't likely to stop with the aging of the population. If I wanted to make a joke, fortunately, the US has the lowest life expectancy in the developed world. End of joke. It's again a semi-joke, but anyway. So with the compounding this with the debt, the interest that you have to pay on the debt that has now passed over the military budget, the biggest two areas of spending are so Social Security and interest of the debts, things that actually don't produce much. You could argue about Social Security, obviously, but that's the idea. One little thing about the job growth, that's been touted by the government. The thing is that they always announce jobs. We create jobs. First, I have shown a lot of times before, it's mostly part-time job creation and full-time job destructions. But on top of that, the numbers that are being announced, like crazy number, crazy creation of jobs, are always revised on the downside, a couple of months later. So the creation of jobs make the big news. Nobody talks about the downwards revision. At least the MSM media, that the MSM doesn't talk about this to push the current administration narrative. They are only parroting what the government is doing, and this is one of the key issues in democracy, is when the journalism is not done anymore and just parroting what they are being said. So job growth is not, and just it was titles, articles, titles, and it doesn't come from right wing, basically journals. The big screen, the big screenshot is from the Washington Post, and I believe the other one was Politico. Maybe. Yeah, I think it is. So Washington was the big one and Politico the second. So not exactly right-wing extremism news outlet. Just give you an idea about one of the issues here in job market. So the pie is the split between the wages and everything that doesn't go into the salary, which are taxes and all that kind of stuff. It's already 2/3. So when an employee gets his salary, it only represents 2/3 of what is paid by the by the company. Just for the record, it's even worse in France. In France, we usually say that if you get $1 on your salary, this means that the company has paid $2. Graph on the right is a little bit more interesting. Let me show you that bigger. Why? Because what is it? Yes, because let me remove myself from this. Why? Because it's the split of total compensation between the private industry and all the state and government. And you see that the compensation in the state and local government is bigger than in the private industry, which is an issue because first, it doesn't give any incentive of people to create wealth, to have producing jobs. As a reminder, an administration doesn't produce anything. They're basically collecting tax, they're helping some company work, but they don't produce anything. The only sector creating value is the private sector. And when you see this, the second issue is that for one public job, it has to be financed by 3 private jobs. So now you get the issue. It's another way of seeing things that just shows that it's totally unsustainable at this point. Well, it is what it is, but I thought this was interesting information. And I wanted to finish with what? With that American dream is dead. We've been talking about the crushing of the middle class basically since the 2008 financial crisis, when they started, printing like crazy, and which starting, wealth transfer from the low middle class to the elites. And basically, these are the kind of news article that we find everywhere, just because now it has become what's been saying for the last 10 15 years is basically finally going mainstream, because there's no way to hide it anymore, except from the government that still think it's possible. But anyway, so let's move to the markets. The markets. So you see equity markets since 2003. Let me remove this so we can see that better. Hey guys, I don't see any questions coming. So I guess that James, you don't have any question, James? Or maybe, okay. So no questions, no problem. That's fine. Okay. So yes, equity market since 2023, you see that Nasdaq is up 80%, S&P up slightly below 50%. So everything is going up. Everyone is happy. Life is good again. But why do I show you this? Why cannot? Okay. Why do I show you this? I wanted to show you this because just taking a look at some equity markets versus the S&P. So the S&P is the reference. So what does it show you? It shows you that the Nasdaq overperformed the S&P from the beginning of 2023, which was kind of the bottom of the most recent little bear market in 2022. So it overperformed in 2023, then basically performed the same pace, and then started overperforming again. Now, if you look at the other sectors of not the economy, but other equity markets, what happens is that you have the Dow Jones, the Russell 2000, and equity markets, except the US, are all underperforming both the S&P and the Nasdaq. So why do I tell you this? Why do I tell you this? because of also this chart that I see as a confirmation to something that I was saying in a post this week about the US dollar and the de-dollarization again. So the de-dollarization happening, you have two options when you have US dollar that you don't need to, because you start trading in local currencies with your partners. So let's assume we are talking about China, for instance. So you have US dollar stashed in US treasuries. So US treasuries where you basically lose money, with rates going up, and it's not performing as much as it used to compared to the US market. So basically, you have dollar. So the question is not to take it back to your local currency, but what do you do with it? So you have two options. So you sell it to get back to your local currency, but what to do with it? Invest where? The other option is when you have US dollar, you don't want to put them in treasuries anymore just because of the US debt. What is the best other option? Well, it won't be the Dow Jones, it won't be the Russell 2000, it won't be markets ex-US, but it will probably be Nasdaq. So S&P potentially, because it's not going down as much as it's not going. Let's say that's the flat reference at this point. So if you take the reference, you see that the other ones are going down, and the Nasdaq is going up. So Nasdaq is probably one way to stash some dollars if you don't need them. And what this graph shows is that, but this is a trend that started, in, let's say, we had the bottom in 2010 or something, 2008. So now you have a lot of money coming inside the US equities, and it's more than it's ever been. So 60%, about 60% of the US financial assets are held by foreign countries, investors, whatever, but not US investors. You have a lot of cash that is coming into the US equity market, which is a possible consequence of the de-dollarization. Just my opinion. You are welcome to disagree and tell me that in the chat. Another thing interesting, I had an article say, why even diversify? Why not put everything in S&P 500? It's obviously, I believe it's an idiotic statement. You don't diversify to get better returns. It's impossible. It's nearly impossible to beat an index when the index is going straight up, like we've seen here. It's very, very difficult to beat that, specifically with some kind of asset selection, and even worse when it's driven by, I think I have a chart on this. Even worse when it's driven by only a couple of names. The percentage of stocks performing outperforming the index today. I need to remove myself to see that. It's probably around 20% or something. 30%. It is very low. So you won't beat the index with stock selection. The only thing that you can do is buying the top stocks. And I believe that's why, that kind of chart is totally idiotic, because you just cannot be at an index that is taken up by only a couple of names, except if you only invest at the top performing stocks. But when you do that, the issue is that you massively increase your risk. Now you are exposed not to a market risk, but you are exposed to a company risk. And what if this company is just publishing poor earnings or whatever that may move the market? So you had systemic risk, and then you had a company risk, which may not be what you want. The idea of diversification is to improve your risk-adjusted performance. And why so very often people tell me, yes, but you don't get the performance for risk adjusted performance. Yes, and that's why the idea, and that's what most hedge funds do, is that they are compressing the risk with a minimal acceptable performance so that they can leverage on top of that if they manage to crush risk. A lot of, specifically quant funds are doing this. Actually, specifically the very large multi-strategy fund. What they are doing, they are running a massive amount of diversified sub strategies, and then after that they leverage that. So I know we've seen, basically there were articles in the past where you had uh, leverage from 2 to 4. It's pretty classic, I would say minimal in the multi-strat hedge fund world. Recently, I was reading an article after Jim Simons passed away about the Renaissance. So their leverage, I believe, the guy that wrote the book, I cannot remember his name. I have Zuckerberg, but it's not Zuckerberg in mind. But it's something in Berg. I don't remember exactly his name, but whatever, you'll find it. And so this guy said that leverage at Renaissance was very often around 7, and he never even mentioned that it could go sometimes up to 20, which is which is massive. But at the same time, they are compressing the risk and diversifying like crazy to be able to minimize their risk and allow leverage for that. So I think it's just, if you want performance and crazy risk, yes, you can do that, but I would not suggest that to anyone. Anyway, so just a couple of charts to show you that the S&P 500 is S&P 10 maybe. That the tech sector will lead the S&P probably in very little time, but that makes sense. The society, and so the world is evolving to a technological world, so that makes sense at some point that the technology become the leading sector, even if we still need to produce and manufacture stuff. So pure markets right now, what can I tell you? So you see the market is going up like crazy. I think it's important to see this in relation to volatility. You can see that the red is the VIX and the blue is the S&P 500. So you see that the VIX is at its lowest value. It will have very difficulties to be compressed much further than that. If you look at some volatility events that we had in the past, so in 2015, for instance, if we started to 2011, so we started, we're already at 14. In 2015, we were at the current level when we had a volatility spike. The Volmageddon in 2018, the volatility was really crushed around 10 for more than a year before it spiked like crazy. The COVID crisis, we were around the current level of volatility. Just to say that volatility cannot be compressed much more than it is. We still have the term structure that we'll talk about in a moment, but it's volatility is it goes from being compressed to a brutal expansion, and basically that's how it works. Now it's being compressed. Definitely, we've been since we had this little down market in 2022. Now it's being compressed back to since mid 2023 until now. The 4 year is been evolving between, let's say, 12, 13, 14, a couple of spike near 20, but that were crushed very rapidly. So potentially, I mean, this means that the volatility spike, we need to be aware of that. However, if you look at the term structure in the white block, I mean, there's no sign of concern at this point on the market. Everything looks good. The term structure is in contango. The only blip that you see here is in October, right before the election. Everyone's preparing for a little more volatility for the October surprise that we get every 2024. I mean, so far, there's no specific pricing for a usual summer of love for an election year. We'll see how it happens, but everything looks good at the moment. The price looks quite stretched at the moment, but we know that the volatility space can change very rapidly, and usually the sign is when the term structure is inverting. You go from contango to backwardation, and this is when things start getting funny somehow. Not funny how, if someone gets the reference. What is it? This is the S&P capital weighted versus the S&P equally weighted. You see the difference. This is another way of illustrating that the market is driven only by a few names and not the whole market. Not the whole market. I mean, you just have to look at this chart, where you see that basically Dow Jones or some industrial companies and Russell 2000 smaller caps basically all underperform. So you don't have to be a smart ass to check that. But the other comments that I thought might be interesting for you is it just shows you that the capital weighted index is actually a trend following strategy. Why? Because you buy the winners and you reduce the proportion of the losers. So, which makes it a trend following strategy. And if you look at it from hedge fund investing, multi-strat strategy, exactly. For instance, I mean, Millennium, for instance, is well known to increase the allocation to its best performing manager, which makes sense, and cut the managers that are underperforming or losing money, which makes sense as well. But what does it do is that basically you buy the winners, you sell the losers, and you buy into strengths and you sell into weakness. So this is exactly what trend following strategy does. It's interesting that many people don't realize that there is trend following everywhere, just because it's one of the most robust strategy you can find. But anyways, let's move on. This chart, what is it? Is this the SPY? So the S&P in blue versus the US long-term treasuries in red. And I wanted to show you this to show you when the 60/40 portfolio died, and it died in 2020 with the COVID crisis. At this point, this is when we started having bonds, because all the money being sent, the liquidity sent into the market, the bonds starting going down. And this is the end of the 60/40. Everything went well when you had diversification between the stocks and the treasuries, about doing the same thing, generating the same performance in the long run, which meant that you could have equity-like performance with a much lower risk. That was totally sent out of the window with the new injection of massive liquidity for the COVID crisis, which sends the bond down, because now you have one So the S&P going up like crazy, which is the liquidity coming into it. You have potentially the de-dollarization coming into play as well. And at the same time, you have the bonds going up. So if you have your 60-40, basically you will end up performing the equity markets, which is not exactly what most financial advisors used to tell to their clients. The narrative for the last 20 years was, okay, you'll get equity-like performance with basically half the risk, and that is gone. And this is shown in the chart here, which is the white one, which is the relative, which is the spread between the S&P and the treasuries. Again, as you see, it was kind of zero, nearly same performance between the two. And then after 2020, you see the trend going up massively, which is equity overperforming the long-term treasuries. And this is why, my friends, the 60-40 is dead. What else? We've talked recently about the dollar yen. If you remember well, the dollar yen being extremely weak, which could have a potential impact on the unwinding of the carry trade. So you saw that we spoke about this before, that the BOJ had intervened already 2 times to support the yen. Well, every time they intervene, the yen went back up, the yen went back down, sorry, the dollar went back up. And now basically all hell is kind of breaking loose. If you remember what I told you the past couple of weeks, is that, when the market is seeing a weakness, they will push on this just to break and make money. And so it seems to be what is happening right now. If I wanted to be, a little bit chart analyst, you have a little flag here that has been broken 2 candles ago. So you have the last one and the one just before. It was breaking point. So we have the top. Last time the BOJ had intervened, it was at 160. It seemed to be at the time their red line in the sand intervene. They intervene again at 158. It didn't work. Now it's not working. So let's see if the BOJ is intervening again, because the unwinding of the carry trade, when if we want to go back there, just as a quick reminder, is the BOJ which is a really big holder of U.S. Treasury, may have to sell their treasuries at this level of the yen. So it will be interesting to see how it unfolds, but we get into the really dangerous zone there. Now, last but not least, Bitcoin. Everyone get excited just because it went from 70 to 60 something, 64. I mean, let's be honest. I mean, it's Bitcoin is a highly volatile investment. It's always been. It still is. The adoption is still low, so the volatility has been compressed to what was the past, but it's still there. I just draw you a little chart. You have a flag here. We seem to be evolving in that kind of flag. We'll see where it breaks, if it breaks on the upside or on the downside. But there's no reason at this point to get excited and come back to screaming, Bitcoin is going to zero. Yeah, we'll probably have time for that. So stay quiet. Bitcoin is a volatile asset. You just don't need to scream every time Bitcoin is moving up 1 or 2%. It just doesn't make any sense. Okay, thank you. I think I'm done here. Yes, I am. I think. What do I do? I don't know. I just don't know what I'm doing with this new platform. Should do that. Yeah, maybe that. Yeah. Okay, good guys. Thank you for being here. I don't see much question, which is why I spend a little more time speaking than answering questions that I didn't have. But it was nice anyway. I'm happy that LinkedIn user James, a couple of you were here today. Stuart, another LinkedIn user. I don't know what that is. Leo was there. So very happy to see you guys. No question. So we'll end here. See you next week and have fun this weekend. Thank you. Bye-bye.